Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday we saw yet another follow-through to the upside as this crazy rally just skyrocketed from the lows of last Friday, and we come into this Friday substantially higher than where we were. In last Friday's video, I talked about a potential decline that was likely to happen. As I've been discussing since Sunday night's video, Friday's rally late in the close set the tone for at least a rebound rally toward the S3 number, which happened to be 3373. Obviously, we went well beyond that level. We had a major event that no one could predict, and at this moment, we still don't have a president-elect of the United States of America. Markets have been rallying on who knows what. The uncertainty fueled the markets like we haven't seen for a long time. In fact, we had over a 100-point range on the S&P in one day. This is unbelievable volatility and certainly is appropriate for some very unprecedented times. As I've been discussing this week, this rally over the last couple of days have blown through the RXT numbers on the market grid. I've not seen this before, but we've had two back-to-back RXT sell signals, which is very unusual. Volatility hasn't been this high since the crisis began back in March and April. So we've seen some amazing activity in the markets, and it's all been one-sided with the algorithms and just about everybody experiencing FOMO and buying prices no matter what they are. Well, sometime late yesterday, we saw a climactic end to this rally. It is likely that we're going to see at least 2 to 3 days of downside action from here, as things just got way overdone for no apparent reason. Looking at the magnitude of what we saw was very hard to estimate. In fact, it blew through all my normal quant numbers that I use every day. My expectation is now that volatility is expanded, that the market grid will come back into play, and we'll start to see some normalcy. At least the market grid has adjusted for this volatility. As we come into Friday, we're almost a complete opposite of where we went out on last Friday. We closed in the 32 handle last Friday. Here we are closing at the 35 handle this week. So a 300-point rally, most of it in the last couple days. Of course, we've seen all the tech stocks and the NASDAQ lead the way again, and everything just got very frothy very quickly. I don't believe that the markets are going to be able to follow through and go to an all-time new high. As far as the patterns, it looks like we printed an exhaustion high yesterday. There's still a lot to do today. We have unemployment numbers coming out before the opening. We're expecting to see about 600,000 new jobs, and the unemployment rate is expected to downtick by 0.1. Now, so far, markets haven't really paid much attention to the economics. As I mentioned yesterday, we saw a downtick to 7.2 million, not under the 7 million that I thought we would, but definitely a downtick. We did see new claims soften just a little bit. But as we come into the employment numbers today, it's most likely to continue to show improvement. The other thing that happened today was the Fed meeting and Chairman Powell's comments. We can't get through tonight's video without discussing what they said, or maybe what they didn't say. And what I heard was them saying the same thing over and over. And if you recall, going back to the last meeting, at that point I said that the Fed has lost all credibility. They certainly didn't gain anything today by the remarks that Chairman Powell made. As always, he used terms like they have lending powers, not spending powers. He said that 3 times. And the reason why he emphasizes that is he does not want to get into the moral hazard somehow of that he's spending taxpayer money. The realities are is the Fed can't spend money. He's right. but they can create money, and they've created plenty of it. We know this. All they're telling us is they're going to continue the asset purchases, 120 billion per month, 80 billion in treasuries, and 40 billion in MBS or mortgage-backed securities. So they're continuing to support the real estate market, and they're continuing to buy treasuries. It's my opinion, and you see it in the yield curve, as they're buying mostly short end 2 and 5 year securities. They're keeping everything very short, it would appear. As we go forward, you're going to see the yield curve on the 1030s and the 510s continue to expand a bit or otherwise steepen, which is going to keep the financial markets more stable. They do not want to see the yield curve flatten too much, and I've spent a lot of time over the past several months talking about this event. One of the other comments he made is that they're using broad and forceful efforts. It's interesting that they have all these cliche words all through the script, and he repeats them, and that's somehow supposed to make market participants feel more confident, I guess, in what they're doing. The last thing that he mentioned is about the fiscal stimulus. Now, nothing's changed. As I mentioned earlier in this commentary, we don't have a president-elect. Even if we did, and it's a new president, he's not going to be in position to do anything until next year. Nothing really changed in the construction of the House versus the Senate. So can they come up with some sort of deal? Maybe they can, but they don't seem to be motivated to do so. And as long as this election uncertainty remains, I don't see them doing any kind of deal. So don't expect stimulus to bail the markets out. So I believe some reality will come back into the markets over the next several days. And just know, as fast as we went up, we'll go down twice as fast if confidence is lost. So there's still a lot of volatility that's likely to come ahead as we go forward. As always, as I did in yesterday's live stream, if it gets crazy on Friday, I'll come in the last couple hours of markets and do a live stream and talk about what's going on. Let's go ahead and take a look at the charts, see what they're telling us for Friday. As we begin the review of the WaveTech database, we saw an extreme amount of new buy signals. We did see 7,654 new buy signals, only 130 sell signals, a very bullish sentiment for Friday's open. I do want to caution you, make sure if you're a WaveTech user that you look at these trades that are coming out very closely. Some of these stocks have jumped substantially over the last couple of days, and this is triggering a buy signal. So just be cautious, make sure you look at all the trades very closely, and that some of these stocks haven't surged to a point where you're buying more risk than you're buying returns. So be very careful with those type of trades. The other thing that's happened in the database is we went from 0 sectors long just 3 days ago into 5 sectors long. Right now we have 4 current positions that have come in. 3 of them have been on for 2 days. 1 of them came in yesterday. And as I scroll down below here, you see basic materials is a buy for Friday morning. Very volatile markets come into play. We're seeing a lot of heavy rotation coming back into the database. So I'll be covering this over the next several days to extrapolate out what this means for market trends on a short-term basis. After today's close on Friday, we will run our intermediate models, and last week we saw a substantial amount of sell signals. We dropped back to the 41.45% level, basically right at 42%. So it's managed to maintain the bullishness. It is likely that we will see some buying coming back in. There's some trades that might be reversal trades coming back in after last week's sells. Those of you that followed the channel for a while or been a client of mine for the last 10 years or plus, when we see a lot of these trades that got kicked out last week come back in this week, those are very positive trades. So if you're an institutional client, make sure that you proxy out if you have any kind of buy restrictions or any kind of penalties on any mutual funds or anything that might be getting kicked back in. So be careful with that as well. But this volatility is bringing up a lot of things that we haven't seen. As I talked about in the opening comments, we saw a double RXT sell signal, just a lot of events occurring, which bring up caution just because there's no precedent for how these things are likely to pan out. As we look at the daily chart on the S&P futures, we're down about 13 handles. We were down 23 earlier, so we're seeing a little rebound as we're coming into the London Open or getting close to it. And this is likely to see a resurgence on the downside. It looked to me, as I mentioned in the opening comments, that we did see a climactic sell signal. I'll show you on the cash charts here in a few minutes exactly some of the patterns that are unfolding that seem somewhat unorthodox, that bring up some concerns about this rally continuing. Now, if we look at the market grid for today, you'll see that R1 is 35.31. That would be a new high. S1 34.78. We actually traded an S1 overnight so far, so that has already occurred. My expectation is we could see the 35.31. Like I said, that would be a new high, most likely set up for a reversal pattern to the downside if we did penetrate the new high. I don't think we'll get that high, but we could. We've seen some substantial momentum behind this market, but I think it's starting to fade finally. So what I'm looking for here today is the absolute top end would be an R1 35.31. S1's already printed. We could see an S2, which would be a 34.48. Pattern, what we're also seeing is PPMs are stalling here. Everything's kind of stalling. We're not in trend mode at all. And as I mentioned last night, that we're most likely going to fall back in toward these moving averages where my cursor is right now. And that tells us that we'll pull back into those levels and see what type of support is there. And that's going to take 2 or 3 days to actually unfold. As we take a look at the S&P cash, you see this is a vertical move off the lows. If we go back to last Friday, the market finished well off of its lows on Friday. And I mentioned in the opening comments, if you watched the live stream last Friday, we saw nearly a 50 handle move in the last 9 minutes of trade. And I mentioned on the live stream, it's there, it's out in the public, that I thought that rally set the tone for some recovery rally coming into this week. Now, we had the election coming in. That's why I tagged Sunday night's video, Election Mania. Well, we certainly got that. And it appeared that the market algorithms and all the forces behind the markets just pushed this market beyond everybody's wildest dreams every day. And the buying just kept coming in. A lot of it was short covering, people selling, recovering, reselling. That drove the markets higher. Yesterday's action was also the 5th day in this pattern. And typically what we'll get here is a 5-3-5 if we're going into a new sequence to the upside. In this case, I think what this is likely to be is potentially a X wave. And I'll draw that in here so we can take a look at it. All right, this is the pattern that I've been talking about for the last couple months. This ABC down, we had an ABC up, then we had ABC down. My expectation last Friday is that we would go down to 31.21, possibly come down to the 3,000 level. I've seen people on the channel saying that Bob said it's going to drop 20%. I didn't say that. I said it could retrace if certain things happen. Well, they didn't happen. We didn't get the confirmation after 2 days. Everything changed after the election. We know that. And this is exactly what I've been saying throughout the week. So what we're seeing here is we've got this ABC, but there's absolutely no structure. But I'm going to show you, we're going to go to an hourly chart. I usually don't cover that, but this structure here is straight up. There's no ABCs, there's no 3 waves in the daily. It's just a straight rally. And typically what you get here is this ABC down. This is A, this is a B wave, this is a C wave, and then this top wave here is going to be an X wave. And the X wave is part of what's called the double zigzag ABCX, ABC. So I've been talking about this broad trading range for a while. It looks like we're likely to stay in that. And the next 2 days are going to be really critical. As I mentioned when covering the futures a minute ago, I think we're going to trade back into the moving averages. They're very flat. There's no real momentum on the upside. So they're not only are they flat, they're vulnerable to be penetrated. And right now, they are down between a minimum of 34.20 and the low end is 33.86. If you look over on the grid here, the fast moving average, which is the 10, is 33.86. The slow average is 33.83. They're basically the same number. 21 period moving average is at 34.20. Also, referencing the PPMs here, you're not seeing any upward momentum there that tells you that those levels will hold if we did reach it. It's not going to be, most likely won't happen today, but over the next couple of days, we should at least drop back into that 34.20 level, possibly down to 33.86. Now, everything's going to be predicated on the market staying down below. Those are going to be the key numbers. I'm going to go to today's market grid number. You'll see that the S1 number is 34.96, 34.80 S2, 34.65. So 34.80 is going to be a fairly good target. Today, R1 is 35.24. We saw a 35.29 high yesterday. So we could trade up to an R1 S2 level is what I'm expecting here. But if we do penetrate 35.24, then the next number is 35.40. And of course, just laying right there was that high that we printed on the top of the upward B wave, which was at 35.49. I mentioned in covering the database, we had a high back on 9/2, 35.88. We had a high of 35.49 on 10/12. Yesterday, we had a high at 35.29. So we have these stair-stepping lower patterns. Even if we penetrated, and I'm right about this being an X wave, then that would tell us that we're going to come back in to these levels. So let's unpack that X wave theory just a little bit more. So I talked about this ABC pattern that we've been going through over the last couple months. I'll draw that in. Now I've talked about this X wave, which would be this X here. So what we would get, and then we'd get an ABC pattern like this, and this pattern would continue in this broad sideways band. I still believe that the 200-day moving average is in play unless we clearly close above this B wave and we show momentum starting to pick up. This is likely to be the pattern that's going to unfold. What I showed you a minute ago in the database, clicking back over 42%, that actually is in line with this type of pattern, is the 42% just tells us that the next 30 to 45 days has a potential for a continuation of the rally. It doesn't mean it has to happen the day the 42 number gets triggered. It just is a trigger point, but it's got to maintain this. So we could literally see a big down day in the next couple of days and see that database start to waffle around this 42% level. I've seen that many times over the past. But this pattern I've drawn in right now is the likely pattern that's going to continue. I do not see this thing just surging and going through the highs. Don't have any basis for that at the moment. I'll update this as I always do every day, but the pattern that I have drawn in right now is what my expectation is for this pattern, which is to stay within these levels right here and be somewhat random. So we will get this ABC X, which the X wave we just have, and then we'll get another ABC down. This is actually a clearer pattern on the weekly chart. As I continue with the scenario of an ABC pattern unfolding, this is the ABC very clearly here. Now we're getting this move up, which is the X wave, and then we should see this thing come back in toward the 21-week moving average, which is 29.30, and literally see this pattern unfold like this. This is the market grid pattern that's unfolding here is going to be very interesting. I'll clear this out so I can show you. I believe that the market grid will turn up. Based on this trade, you'll see it form something like this, and it'll probably flatten out again at some level. Just depends on how high this goes. Since we exceeded this right here, we exceeded the RXT for the week, we're likely to see this pattern unfold. So I'm drawing this in just one more time. This will go up like this. This will also go up. And then the market grid will start somewhere here as we come in on Sunday night. I will cover exactly what's going on, suggesting that this high-end range is going to be pretty critical. And today's close will be very instrumental on how everything sets up as well, because the market grid is actually a volatility calculation off the previous close. So Friday's close will have everything to do with the positioning of the grid and the volatility that we've seen over the past several weeks, which has increased substantially, will cause the ranges that it's going to predict and the different data points. The final thing I want to cover on the S&P cash, I saw this and I talked about this in the live stream yesterday, is a very unorthodox type pattern that's unfolding, which for me, when I see things that aren't normal, then that tells me something's going on. But I'll draw this in. We've got this stair-stepping pattern that this is an hourly graph, and this pattern, not only is it stair-stepping, but each step kind of is contracting, especially the last two. So basically what happened is each day we gapped up. We finished the first hour for the most part was the high or thereabouts, and then we drifted lower. We've seen the same thing Wednesday, same thing on Thursday. Now today, so far, the futures look like they're going to come in a little bit lower, are likely to trade down toward some of these numbers here at the 34.95 level. This is an hourly graph, so this is a much different setup. We're likely to move at least toward that 21 period moving average in an hourly. So if you are looking at some hourly intraday charts on SPX, those are the places you want to look, but it also will be in line with the market grid numbers that are out there. That number will come in somewhere between S1 and S2. Next market I'll cover is the NASDAQ. The daily NASDAQ did get an RXT sell on Wednesday. We were able to follow through. A lot of times we'll see a move up toward the RXT number. Yesterday's high was 12,119. RXT was 12,151. Typically we'll get a reversal off of that. We are seeing some weakness overnight. We're seeing it down about 0.8%. We're printing down toward the support numbers. S2, 11,869, low 11,911. So we're getting close to printing down toward the S2 number. Could go as low as S3 today. The volatility in this index has been obviously much higher than the other indexes. The other thing to point out, PPM1 is in a trend mode, but it is turning down. PPM2 is turning down. So what little momentum we were able to pick up on the longer term moving averages are already starting to fade a little bit. A close below S2 at 11,869 would be negative, suggesting we're going to trade back into those moving averages on the daily, just as I discussed in the S&P. It's a very similar situation. You can see that the fast average 474, which is the 10, the 40 period moving average 11,457, and then the 21 is the highest average in the pattern. The same configuration. This kind of configuration also tells us that we're in this trendless market. The same sideways pattern that I discussed in the S&P exists on this market as well. Take the analysis that I did in the S&P and carry that out with the expected patterns on the NASDAQ. Next market I'll cover is the US dollar. What we're seeing in the dollar yesterday, we got right to that 21 period moving average. I discussed that a lot in last night's video. The PPM1 is down at a minus 0.23. That is a substantial downtrend where we have a flat 10 period moving average which supplied no support, and we traded down to the weekly extreme 92.83, the STX. We traded through that 92.49 and we closed at 92.57. So if we close below that, expect to see the grid actually turn lower and the US dollar starts to move a little lower, which will impact some of the activity in the metals, which I'll cover next. This pattern suggests that we topped out here and that we're going to see some further downside based on what's going on. The daily chart illustrates that quick shift to the downside clearer, as you can see how the market grid expanded substantially to the downside. So far overnight, the S1 is 92.35, the low's been 92.56, so there could be still further downside in the dollar, which is likely to help the metals, but they got a little bit overdone. I'll go through that in a minute. But this configuration suggests that we're still in this very choppy sideways range. I don't see us, as I've been talking about, I still think we're going to see a major bottom in the dollar here, but a lot of shifts are occurring right now just based on the lack of results from the election and the uncertainty around it. So we'll continue to watch this pattern unfold over the next couple of days, but it does look like everything's turned to a little south, but we're going to test some key support levels. Those support levels are substantially lower, around 91.75, so there's a lot of leeway to the downside right now. Tonight is gold. We did see a sharp surge on gold yesterday. I've been talking about the potential for it going up toward that 0.382 retracement number at 1940. We exceeded that. We traded as high yesterday as 1954, and we also got an RXT sell signal in gold. We've been trading slightly negative overnight, but as we look at the overnight action, the S1 number is 1937. We hit an exact low on S1 at 1937.90, and the R1 number is 1955, so we haven't quite reached that, but we're so far trading R1, S1. My expectations are we're likely to see more of a follow-through, because we did see all the PPMs break out at the same time. This is a very bullish event when all three cross through their first and second derivatives on the same day. That is a very bullish sign. As I mentioned in yesterday's video, I saw this thing ready to turn, and I expected it to close over that 1924 number. They just ran through it yesterday. And I think even the action in the gold tells you that a lot of folks, they're somewhat nervous around what's going on right now. There's definitely a hedge bet being put on in gold right now. On the weekly chart, we exceeded the RXT number 1930. As I mentioned, 54 high. Right now it's trading 1948. And if we close above 1930 today, that's going to be a RXT sell signal. So we could see a couple of weeks that pull back into this range. So there's a number of things that are starting to happen here that are suggesting improvement, but we're not quite there yet. If we look at the PPMs on the weekly chart here, we're not seeing an impulse type sequence yet, but the underlying power in this current uptrend is coming out of the PPM2, which is up at 0.48, but it still hasn't crossed over its second derivative yet. So there's still some work to be done. I suspect we could trade as high as an extreme around the 1969 level, which would be a 50% retracement of this pattern. But my expectation now is basically 1912 to 1969 level on a trading range as we come into next week. Before completing this video, I did mention that I would, on Twitter, that I would put up the market grid for Bitcoin. Bitcoin is surging. I talked about this over the last couple weeks now. I've been discussing the power in Bitcoin. I still strongly believe that we're going to probably 18.5 to maybe 23,000 on Bitcoin. I went through a lot of detail. I actually did a video one day on Bitcoin talking about this. And on the weekly charts, it's even much more powerful. But we are likely to see an RXT sell. But the way that the grid is going to respond to this is going to be substantial. So I'm not going to go through a lot of detail here, but you want to watch that video on Bitcoin that I did, I think it was last week. It might have been the week before last. Watch that video and it'll give you some really good breakdown of exactly what I'm seeing happening. This will complete the video. Thank you again for another great week, and I will talk to you on Sunday night.